Hey guys, guess what I found today? I found an HD DVD player at the Goodwill store. Like 15 bucks. They don't even make these anymore. It's a complete machine dedicated to obsolete discs that I happen to have a lot of. Yeah, okay, we're talking about Lyft and Uber today.
Xbox, Twitter, Uber,
Postmates,
Netflix, MoviePass,
Lyft, Google,
Facebook, eBay,
DoorDash,
Apple, Amazon, Airbnb,
The Apptrepreneur. Hey everyone, this is Kevin the Apptrepreneur, and hopefully you can forgive that rather embarrassing intro right there because I just wanted to spruce it up a little bit because today's story is one that we have told time and time again. It always sounds a little bit different, and yet somehow it's always the same. And that is that Uber and Lyft are actually going to be raising prices. And as a result, investors are actually getting really exciting and giving a buy rating, and they might not want to do that. However, before we talk about any of that, let's have a word from our sponsors. Times are changing for gig workers and the gig economy, and there are a lot more gigs from a lot more companies than there used to be. That's why when people ask me where they can go to find resources for the gig economy, I recommend gigworker.com. At this site, you can see what other gig workers are doing and discover better opportunities from industries, companies, resources, and even a forum where you can talk with other people in the gig economy. Gigworker.com is a great resource site whether you work for Uber, Lyft, Postmates, DoorDash, TaxRabbit, Thumbtack, Upwork, whatever. There's a gig for you and there's a forum for you on gigworker.com. Gigworker.com for all your gigs. It's amazing what I see investment analysts say when it comes to Uber and Lyft. Granted, I am not an analyst. I am not a business major. Heck, my math isn't even all that good. Neither is my spelling, for that matter, but I can't do anything right, apparently. But you know what? I've been watching Uber and Lyft for a long time. I drove for them for a couple of years. I now talk about them on a fairly regular basis. I am actually more involved with how this company works now when I'm not driving than when I was driving. And so it would seem that on the outside, looking in, you can see that these companies are a bad investment. Of course, it didn't stop me from buying a share, but again, vanity stock. Look it up. Anyway, analysts are all over themselves because they believe Lyft will turn a profit by 2021 in an upgrade that pushes shares higher. For the record, as recording of this video, today Uber shares were down. Lyft's shares popped. They were up. They were up. And it's mainly because of, analyst calls like this. Price increases will allow Lyft to turn a profit sooner than expected, according to Guggenheim. The firm upgraded the ride-hailing company to buy and set a $60 price target. Lyft closed at around $49 on Friday. Shares of Lyft popped 4.3% on Monday. Quote, "We all underestimated how quickly the competitive mindset might shift under public ownership and how much leverage there is in the Model 2 pricing," Guggenheim analyst Jake Fuller and Ali Faghri wrote in a note to clients Monday. Since Lyft went public in March, followed by its biggest competitor Uber, investors' biggest concern has been the company's path to profitability. Fuller and Faghri has said it could be tough for Lyft to raise fair prices or cut driver wages in a competitive category, but he said the company's pricing model over the last 2 quarters has surprised him. And by the way, this is what Lyft stock was doing on the day the story broke. Guggenheim said that Uber's need for cash in the Uber Eats business and its push into more international ride-hailing puts Lyft in a good position to raise prices alongside Uber, with the mentality here being that since Lyft is clearly not expanding as much, well, they might, stem the losses a little bit, and of course, they have that room to grow, whereas Uber's growth is a little bit more limited. Lyft and Uber are now public, and Uber needs margin from U.S. ride-hail to support efforts internationally and in the highly competitive restaurant delivery business, Fuller and Faghri said. Guggenheim now expects Lyft to turn a profit in 2021 instead of 2023, mainly due to the price increases with limited impact on demand. Price increases should stimulate take rate, bolster contribution margin, and yield narrowing losses with the potential for upside to consensus across key metrics, Fuller and Faghri wrote. Shares of Lyft are down more than 30% since its initial public offering in March, while Uber stock is down 25% since its public offering in March. That's pretty much all the story there, and it appears that Uber and Lyft are intending to raise the prices. According to this article, Lyft is getting a green light from a team of analysts at Guggenheim. That's Guggenheim. So here's the thing. Here's what we need to keep in mind. Because here's the thing. It says right here in the second quarter earnings release, Lyft handedly beat Wall Street expectations for the quarter, sending shares up as much as 10% in after-hours trading. Yeah, that's great. Where's the price hikes coming from? Well, here's the thing. They probably are going to be raising the prices on customers. We know that they have to at some point. And it's going to be a monkey see, monkey do situation. It'll be either Uber or Lyft that will raise the prices first. I believe Uber will raise the prices first, precisely because of some of the things that were said here. As Guggenheim pointed out, Uber is international. They need the ride sharing to stem the losses from international and food delivery. Lyft doesn't have those problems. And for that matter, Uber doesn't have this other thing Uber has this disadvantage, I should say, that Lyft doesn't have. And that is that Lyft actually did cut the driver's rates recently. So in some areas as low as 35 cents a mile. 35 cents a mile. Yep. Someone's rates actually got as low as 35 cents a mile. I mean, geez, just absolutely amazing. So what Guggenheim here is thinking about, he's looking at the fact that the drivers are getting paid a lot less. Now, we don't know exactly how many drivers are quitting. I suspect an awful lot. We talked about this on Sunday. However, Guggenheim is probably thinking drivers aren't going to be quitting en masse, or in masse, however you want to pronounce it. Basically, drivers are going to be quitting as frequently as people like me and other Uber tubers say they will, although I think they will be. I think 35 cents is definitely a breaking point for a lot of people, if 42 cents didn't break them already. And he's expecting drivers will not quit. He's expecting Lyft and Uber to eventually have to raise the prices. Uber will have to raise the prices first so that they can compensate for the losses. Lyft will probably raise afterwards, and therefore they will get a bigger piece of the share because they have dropped the drivers' rates. For that matter, Lyft is forcing drivers to have 2017 or newer vehicles. Hence, Lyft might gain a reputation of having very nice cars. I know when I took a Lyft fairly recently, give a $5 cash tip, by the way, I noticed that the car was relatively new. I'm not saying that rule is law in California yet. Where the analysts seem to keep overlooking the fact are drivers who are not happy. Now, I'm going to be highlighting this most of the week, but there is a 3-day caravan for AB5 and a union. These are drivers who are basically going to be driving in support of regulation for rideshare and getting unionized. Now, some people don't want to be unionized, some people don't want AB5 to pass. That's besides the point. The point is enough people are unhappy that this is actually a thing. These are the things that honestly investors should pay attention to. Because here's the thing, Uber and Lyft drivers quit whenever they want. They just do. And they have been bringing a lot of noise to the steps of the government. And the government will eventually have to respond. And they will have to respond in some way. We don't know exactly how they're going to respond, but we know they will respond. And when that happens, who knows if 35 cents per mile is going to be realistic. Heck, they might have to charge closer to what the taxis charge. And once they have to pay what the taxis charge, then they're in trouble. I don't have the article up. I kind of made the mistake by closing it, but there are many taxi drivers who are struggling to survive because Uber and Lyft are just that much cheaper. Now, granted, if Uber and Lyft are the same price, taxis might have a better share, and then who knows? It depends what the regulation looks like, because if you're getting paid minimum wage for driving a car, but the taxis don't change and they're paying you benefits and all that, I don't know if taxi drivers actually have benefits. I hear that they do. Then the taxi industry might be looked upon more favorably. I don't know. Either way, I think this is very wishful thinking. I do believe the stock will go up a little bit. Again, they're cutting rates. They will likely raise the prices. They will likely do all of these things. The question I have is, do these analysts live in the real world? where they are looking at what the drivers are doing, that they are looking at how much money Uber and Lyft continue to lose. Are they? Here's the thing. One of the things that he said was that the pricing model surprised them. Well, here's the thing. It surprises you in the fact it's effective at getting people to use the service when it shouldn't. It's really, really cheap. Unfortunately, it doesn't make any money, and the drivers are finite. You will run out of them. Many of them are quitting. So I personally recommend, unless you want a vanity stock, that you stay away from these stocks personally. I mean, I've only got one share of each. That's all I plan to have. That's all I plan to have. It's very interesting to see how investors are continuing to justify all these losses. But maybe that's just what these investors are doing. Maybe, they got in, they're embarrassed, and they're trying to do what they can to turn public perception around. It should be noted again that was this today? I think this was today, that the stock going up today had everything to do with this new buy alert from Guggenheim. Not because Lyft is actually losing any less money, not because they're making any more money. Investing is a really interesting thing. And yeah, for passengers, get ready to get charged more, knowing full well that your driver will get paid 35 cents a mile. And we're just going to leave it there in case anyone wants to join the caravan. So anyway, we're going to end that there. What do you folks think? Do you think Lyft is a buy? Do you think they're going to be profitable by 2021? I think that's wishful thinking personally, but we'll have to see. I'd love to know though. Comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon exclusive blog. If you want more content from me that's not rideshare related, check me out on my other YouTube channels, Kevin T. Rodriguez, Apptrepreneur Vlogs, and Autograph Hound. And finally, if you want to talk to me or other fellow rideshare drivers, check us out at the Apptrepreneur Hangouts on Facebook. And as always, flame responsibly. Have a good one.